Most traders load their charts with a dozen indicators and still feel lost. The truth, you only need a simple moving average stack to read trends, right? Time your entries and manage risk. In this video, I'll show you guys the exact moving average combination that I use daily, right? The 20 days moving average for the short-term trend, the 100 days and the 200 days moving average for the long-term posture. Together with my 1GT Pro indicator, you get to trade with clarity, avoid the fake moves and build consistency, build consistent profits without the noise. Make sure you watch this video all the way to the end. Let's go. So first of all, let's talk about this thing called the moving average, right? What is a moving average, right? Essentially, it's a line that you can pull out on any stock, all right? And this line kind of like smooths out the noise. You're able to know what we call the true trend. All right, it reveals what we call the structure of that particular stock, whether is it in the longer term or even in the short term. So as the name sounds, right, moving average, right, it measures the average of the prices over a period of time, right, and that's where a line will be automatically plotted. So some of the common mistakes that people use in terms of moving averages would be like, they pull out a dozen of lines, right? They have a 20, 50, 80, 100, 120, 200, and there's like 10 lines on the chart. No, you don't do that, right? For me, I only use 3 simple lines. That's it, right? Each of them have their role to play, and that's it, right? We don't complicate things. We give the lines a meaning, all right? And there's the reason why they even exist on the chart. And the next mistake would be to kind of like react to every crossover. So if you have a couple of lines on the chart, the line will cross each other and then you react to every single crossing, right? We don't do that, right? There's a very specific way later I'll show you guys as to how we read the moving averages and, gather what we call the trend in the longer term and even in the short term. So the goal of the moving average is to read the posture of that particular stock, right? And to kind of like read the momentum as well. It's not really to predict the bottoms, right? Or how low it could go, or maybe how high it can actually go before it comes down, right? No, right? Essentially, you read the posture, and that's where you can be guided in terms of the trend and take actions accordingly, right? Especially if you get more other confirmations that I talk about. So let's dive into the charts right now. And I have this stock right over here called Broadcom. The code is AVGO, one of the very popular semiconductor stock in the US. And I like this example whereby we can kind of like use the moving averages to explain to you how I actually do it, right? So this is a blank chart. So most people, when you look at the chart, it will be something like this, right? Prices, we have candlestick bar that represents daily prices, right? We open, close, high, and low. So if a green bar, you have a red bar, and every day you get one candlestick bar, right? But based on all these candlestick, right, red, green, prices moving up and down, but it doesn't really tell you the trend of the stock in the longer term or even in the short term. It just tells you that days price action, right? It doesn't tell you the trend. It doesn't tell you the structure. It doesn't tell you the posture of the stock, right? Whether is it forming higher lows and high, whether is it in a strong uptrend, right? Whether is it, kind of like going lower and lower every other day. That's how moving averages can help you, right? So let's go to pull out what we call the longer term moving averages. And for me, right, for the longer term trend, I only pull out 2 simple moving average. And you can see I have this indicator right over here called the One Good Trend Pro indicator. So all the things are over here, all right, with a click of a button, I could pull out all the few confirmations that I seek. And let's just pull out the 2 moving averages, right? The 100 days moving average, which is the red line for me, and the 200 days moving average, which would be the blue line for me. So just these 2 lines, right, very clearly, all right, I can get an idea that this stock, is it in a longer term uptrend or is it in a longer term downtrend? Does it make sense? Like, how do I do it? Well, very simple, right? When the red line is kind of like, moving upwards, sloping upwards, and it is above the blue 200 days moving average line. So both of them, obviously, they're pointing up, right? I mean, over the past, like 1 over year, look at, it's been up since like last year, right? So longer term trend has been up, red above the blue, both pointing up. Obviously, right now, the red is still above the blue, right? In fact, a little bit further apart, right, which is good, right? And both of them are still pointing up. So that just means that the longer term trend is up. We definitely want to think about buying stocks that are aligned with the longer term trend, right? That is the first thing, right? Because we don't want a stock that's like, going lower and lower, and it's like the opposite, right? Whereby now both lines are pointing down and the red is below the blue. In fact, let's take a look at another example of a long-term downtrend. Let's take a look at this example right over here, right? NVO. And you can see that now it's kind of like the opposite, right? The red line, 100 days moving average, is pointing down, And the blue 200-day simple moving average is pointing down and red is below the blue, right? So it's been going down, down, down for more than a year, right? Not 1 month or 2 months, right? For more than a year, we have been in a longer term downtrend. And you can see right over here that we have what we call a bearish crossover. So when we see things like this, right, for a stock that is moving in an uptrend, but you see a bearish crossover, right, the 100 days moving average rate line crosses below the blue line and both starts to point down. You just want to be more careful, right? You want to get out, you want to reduce your exposure, have a plan to stop loss and stuff, right? You don't want to just hold all the way down, because you can see that when that happened, right, it went from 130 all the way to $53. Right, can you imagine if you're holding on to it? All right, that's when you'll be stuck. All right, so we never want to hold on to stocks. They're just going lower and lower, and especially if it's turned into a long-term downtrend. Instead, we're going to focus on stocks like Broadcom, which is a long-term uptrend, right? It might be more expensive, right? But there could be more upside momentum. We want to ride it further because it has already proven itself to be strong, right? To potentially push even higher. So for NVO, you can see that previously, it was okay. I mean, look at this, right? NVO previously, well, red above the blue, both pointing up since 2022, right? So okay, fine, no problem, right? Long-term trend is up, it starts pushing higher and higher. But somewhere along the line, well, things turn, right? Things turn, it reverses, the trend turn down, and that's where you want to know to get out. Okay, so let's go back to this example on Broadcom, whereby we have talked about the long-term posture of a particular stock just by using two simple moving average, the 100-day simple moving average and the 200-day simple moving average, which is the blue line. Now, let's dive a little bit deeper to get what we call the short-term trend of a particular stock, right? And how do we do it? Well, we can pull out another moving average, and that will be what we call the 20 days simple moving average, which I've incorporated into the One Good Trend Pro indicator that I have right over here. Just click on it, and there we go. Now, you can see that there are three lines on the chart, right? We got the red and blue, which talk about, but now we have a green line right over here. You can see this green line is a short-term moving average. It's only 20, and just now was like 100 and 200. Now it's only 20. You can see that this green line, it reacts much faster. It's more sensitive, right? As prices moves up and down, you can see it follows pretty closely. All right. So now you guys might ask me, Joey, how do we know the short-term trend of a stock just by looking at this green line? Well, very simple, or in fact, it's even more simple than that, right? It's just one line by itself. You just take a look at the line. Is it sloping up or down, right? So right away, you can see that the line starts to slope down, right? For like not 1 week or 2 weeks, for like 2-3 months, it goes down, down, down. That means that the short-term trend is down. You don't want to rush to get in when the short-term trend is down, right? Because even though the long-term trend was up then, I mean, when it was coming down, right? When the short-term trend was down from January all the way to April, well, actually it was okay in the longer term, right? I mean, the red and blue was still up, right? Red above the blue, no problem. But the short-term trend was down. So we don't want to rush because we want both trends to be aligned. We want not only the longer-term trend to be up, but we also want the short-term trend to be up. And that has that happened? Well, you can see right over here, somewhere in April, finally the green line, see, we just need to look at the line whether it's moving up or down, right? Finally, the line started to point up. And there we go. Up, 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 flat a little bit, up. Now it's starting to flatten out, right? So when the green 20 years moving average line starts to flatten out, well, it just means that we're in some sort of a consolidation, a bit of a sideways movement, like moving up and down above a horizontal support and even below what we call a horizontal resistance. So that is a consolidation range right now. I would say that we are pretty much consolidating from like 320 to 380 up and down in this range, and that's why the 20 days moving average line is flattening out. Okay, good. So now that we've covered like the three moving averages, right? Then how can we get more confirmations, right, in terms of a specific entry? Right, so we can use the moving averages like the green, the red, and the blue to give you a quick idea of the trend. Right, but is it true that when the short-term trend is up and the longer-term trend is up, you just get it, right? Is it that way? Well, not really, right? Because we want to seek more confirmations for any entry. And what we could do is that for the One Good Trend Pro indicator right over here, well, very quickly, I could actually turn on the very first box. And that gives us the next level of confirmation, right, in terms of a real entry on top of that three moving averages, on top of the posture of the stock, on top of the trend in the longer term or even in the short term, right? On top of that, well, we get the additional confirmation. Let me turn it on right over here. Boom. And there we go. Right now, once I turn it on, you can see that on the chart, well, besides the three lines, you can see that there are now some bullish and even bearish signals that have popped out. All right. And that gives us an additional confirmation of more weakness. So these bullish signals and even red bearish signals has nothing to do with the moving averages. All right. It is a separate other confirmation, right? It's not because the green line is coming down, it comes up. No, right? Or it's not because the long-term trend is up and then the bullish signal came up. No, right? It is a separate confirmation, right? On top or in addition to the moving averages that we talked about. Does it make sense, right? So you can see that now, just now we mentioned that the green 20 days moving average line is pointing down. All right, and you want to be careful, right? You don't want to get in because the short-term trend was down. But now the green line is pointing down, plus you get not one, but you get two 1 GT bearish signal. So that just means that you want to be careful, right? You don't want to rush, right? And we mentioned that, we want to wait for the green 20 days moving average line to turn up. So you can see before that, we actually got a 1 GT bullish signal coming out. All right. However, the green line was actually was actually still turning down right over here, but still turning down. So when we get the bullish signal, well, you could start to put this stock in your watch list. We are indeed starting to see some buying pressure coming back. Right? And with the green light starting to turn up, well, that is where that bullish signal would give that confirmation. Okay, now it is time, because now not only that we got the bullish signal, but now the short-term trend have turned up, the long-term trend is already up. Does it make sense? All right, and there we go, right? Two more bullish signal, green light continues to point up even higher, and that would be, based on this reversal move from here all the way to where we are right now, 104% in just about 7 months. You see what I'm saying about, right? That's where we get the confirmation. That's where we get the confluence of more factors pointing to that particular trade. That's what we call a high conviction trade setup. So let's see if we can get another confirmation, right, on top of the bullish signals, bearish signals, and even the moving average as well, based on this one good trend pro indicator that I have, right? But we could turn on this trailing support level, one of the very powerful features of my indicator, whereby it gives the stock the breathing room to move. It accounts for the volatility. Let me just show you what I mean. Let me remove all these, right? So you can see that when we got this bullish signal, right, the green line, as I mentioned, it was still pointing down. The green line started to turn up, right? But now if you look below the price, we actually have this green trailing support line that pops out, right? And that will be another confirmation, because this green trailing support line, it follows a stock as it moves up, right? But it doesn't follow too closely. Give it the breathing space. It accounts for any volatility as well. And as it moves higher, it follows it even higher, right? There we go. Up, flat, follow, 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 follow. And we are kind of like still above the trailing support level. Does it make sense? Right? So that gives just an additional confirmation where, we got this safety net below, and as long as we stay above that safety net, the trend still looks intact. You could ride the upside even further on top of the bullish signals, on top of the red line, the green line, and the blue line. You see what I'm saying about? So essentially, right, the moving averages gives what we call the posture, right, the trend direction. The trailing support line and even the bullish signals, right, accounts for the volatility, and it gives additional confirmation. And all that add together, that's what we call confluence, whereby all these different confirmations are pointing to one direction. When you take a trade, you're definitely more confident. All right, let's take a look at another case study, right? Meta, right? Meta, one of the very popular US stocks right over here. So very quickly, okay, let me just go to turn off the bullish and bearish signals first, right? And let's take a look at it from the moving averages that we have learned, right? So very quickly, you can see that for Meta, well, we have been in a pretty good longer-term uptrend in terms of the uptrend posture since last year. Just look at the red and the blue line. It's both pointing up, red above the blue. Good, right? Nothing wrong in terms of the long-term trend. However, in the short term, well, the green line doesn't always go up, right? It comes down. Look at this, right? Down, right? Not for 1 or 2 weeks, for like 2 or 3 months, right? It comes down. Here it comes down, right? So the short-term trend can be down. In fact, right now, it seems like the green line is actually starting to point out, right now, right? So even though the long-term trend is up, the short-term trend is actually down, right? So just take note, right? We want both trends to be aligned, right? We don't want one to be up and the other to be down. No, we want both to be up, right? And this just gives us a higher winning probability. Now, let's go to turn on the bullish and bearish signals to see whether we could get additional confirmations, right, on what to do. And there we go. So you can see right now, okay, I don't want to go too far, but you can see previously we got one bullish signal, second one, third one, fourth one, green line turns up, flat, And there we go. We started to see the move all the way up to a bearish signal appears, could guide you to get out, take some profit, easily a 42% in about 6 months. Cool, all right? And when you see a bearish signal, I mean, that's fine, but you see a bearish signal, but now you see the green line, which we have drawn just now, turning down, I think you want to get out, right? Even though the long-term trend is up. Does it make sense, Val? All right. Maybe get that in again when you see a new bullish signal and the green line actually started to turn up as well as another confirmation. This is what we call the confluence. All right. And look at this. All the way up, right? We saw a rally from this bullish signal to all the way here. 29% in about 4 months, right? 29% in 4 months. Okay, now let's take a look at what's happening right now, right? We got 1GT bearish signal right over here, right? And just now we talked about the green line that's actually pointing out. So question, should we actually think about buying this stock right now? What do you guys think? Buy? Don't buy? Wait? Right? What do you guys think? Should we just rush in to buy? Well, I think you know, right? The answer is probably no. I'm not saying that this stock will go down and down and down, right? But what I'm saying is that right now, as we're looking at this stock, right, it just doesn't give us that confluence of the confirmations we need to buy. Right? Because I mean, we're talking about the short-term trend, the bearish signals, all that, right? And it seems like everything's coming out right now, right? It seems like we are, I mean, maybe not as bad as this, but you can see that previously we got a bearish signal, the green light turned down, and down we go, right? So why do we want to get in right now when things are just not looking that positive, right? 3 bearish signals, the green line is pointing out. We want to wait for more confirmations in terms of the upside reversal, right? And that will happen when we get a new bullish signal, something like this, right? If we get a new one, I don't know, it could be over here or here, right? But if we do get a bullish signal and then the green light starts to turn up, like exactly what happened over here, even better. That gives us that confirmation. That's where we could take a high, conviction trade. But if not, if you're getting in now, I mean, yeah, you could do it, right? I mean, but the truth is that you are kind of like against the short-term trend and against all the bearishness that's happening right now. Does that make sense, Mark? Okay, so let's take a look at another final last case study of a Singapore stock that just came into my watch list over the past 1 over week, right? And this stock is Q&M Dental Group, right? And in Singapore listed on the SGX. And very quickly, let's see if we get any confluence of the confirmations we're looking about, right? I mean, in terms of the trend, the moving averages, and even the bullish and bearish signals, and even maybe the trailing support that we talk about as well, right? So very quickly, the long-term trend is up. I mean, look at the red and blue line, it's up, right? Green line would be the short-term trend, all right? You see that the green line is not always up. It's like up and down a little bit, then up and then down, and then now maybe it's starting to point up. Does it make sense, bro? All right? Yes, indeed. Look at the green line, right? It is starting to point up. So we are definitely starting to see the short-term trend turning up right now. So I would say this by over here, like past few days, the longer-term trend, I mean, it's been up since like a couple of months back, but the short-term trend that was actually down a couple of weeks back has started to point back up. So that is definitely some signs of strength. Right? Now let's take a look at the bullish and bearish signals that this give us the added confirmation. You can see, right over here. Pump 1, 2, bullish signal. The green line turn up, long-term trend is up. There we go, right? How many percent would that be? I would say that would be a 42% in about 3 months. Pretty okay, right? Get out first, take some profit. I mean, we got a bearish signal, the green line was turning down, right? Get out, 42%, good enough, right? Wait for a re-entry, and there we go, pump. 2 more bullish signal, right? The green line turns up, the confirmation came, that's what we call the confluence, and we started to see prices again moving all the way up to a bearish signal appear, about 13% upside in about 2 months. Now, why am I showing you guys this stuff? Because right now it seems like, we have 2 new bullish signals that just came out over the past week, right? Pump, right? So it seems like to do like pump, right? 2 bullish signals, right? Pump, there we go, pump, there we go. Right, so now it's like 2 bullish signals. The short-term trend is starting to turn up. The long-term trend is already up. Can you guys see that this could be what we call a high conviction trade setup? Does it make sense, Mark? All right, and that's why I want to share with you guys this, because we have kind of like broken above the 50 cents psychological resistance level, right? Whereby we've been trading below. In fact, we touched it right over here in September, traded lower, but we've finally cleared the psychological resistance level. And 2 bullish signals have appeared. The short-term trend is starting to turn up. So all these are all pointing to more upside. And that's the reason why, when we see stocks like this, whereby, it gives us not 1, not 2, but in 3, 4, 5 confirmations that we're looking for, right? That's where we're more confident to take a trade. You see what I'm saying, about? All right, rather than the stock that's just going down and lower, like what I talked about just now, right? Even if we get bullish signals, like for example, let's say the red, blue, and green line, you're both pointing down, right? The long-term trend is down, the short-term trend is down, and you get a bullish signal. So what, right? You're kind of like against it, right? We want all the confirmations to be aligned, right? And this is something like what I mean, right? Whereby you could see potentially more upside when we get all these confirmations. So there we have it, guys. I hope you enjoyed this video in terms of the moving averages, not just moving averages, but how we combine moving averages with other factors as well, right? Just to get a more high conviction kind of trade, right? So essentially, I talk about, moving averages, whereby we don't want to have like 5, 10 lines on the chart, just 3 lines for me. Each of them have the role to play. Good enough, right? You can make better decisions. You focus on consistency together with other things that you look out for as well. So you can find out a little bit more about the entire One Good Trend strategy, or even the One Good Trend Pro indicator, whereby I haven't had time to cover everything in this video, but you can find out more about the entire strategy. Get 10 of this free webinar. We have the final last webinar of the year, all right, that's happening like in a few days time. So the link is right below the video. Click on it, register for this free webinar, whereby I'll break it all down for you in terms of this indicator as well, how we use it, how it helps us to know when to get in, also when to get out, and so how do we actually filter out a top 1% of hit list stocks before even focusing on them to get in and out. Alright, so you can find out a bit that, alright? Attend the free webinar, the link's right below the video, click on it, and I look forward to see you in this live video, right? So Joey here, thank you so much for watching. Give me a like, hit the subscribe button if you're not yet followed the YouTube channel. That will really help out, and I hope you found some value. I'll see you soon.